reversals in oil, just using simply the volume. Well, where's the prime point? Where is the prime point? Well, the prime point is the highest or the lowest volume. So the prime point is this point here, isn't it? So there's your prime point there. So anything at that price area must be something that is number 2 or number 3 or number 4 or number 5. The prime point must be this prime point here. So anything above that price must be 2 or 3 or 4 or 5. So we can start to recognize that the best opportunity would have been to maybe try and bid that low print there. And the best opportunity would be maybe to try and offer that high print there. Well, if you took the bid and you took the offer, the difference between the two guys is $1,200 per contract. It's only been in 50 minutes to an hour. So that's over $1,000 right there. But a lot of people say, but where's the prime? You get to know where the prime move is because you get to know what volume, big volume is. You get to know how far big volume is big. It's the same as practicing on another chart, isn't it? It's the same as practicing. If you say, but I don't know if that's a prime move, you do know. You absolutely 100% know if that's a prime move on volume. It's like last trader in narrative. It's like volume deltas. It's like the net deltas, like the net positioning on a candlestick. You know what the big positions are because you've already been experiencing those big positions. So when we start to recognize what prime is, all we do is we zoom out and we recognize what prime is. Are those two moves not the prime moves of the oil market? Absolutely. Absolutely the prime moves of the oil market. And we could say, right, well, a prime move of the oil market would be a move of 4,000 or more. We start to recognize the size of these moves. So a move of 4,000 or more would put us into a prime move there. And a move of 4,000 or more would say that this break here is a prime move as well. There's 4,000 there. So a move above that's a prime move. A move below that's a prime move. Now, this is only because this is from 2 o'clock. A prime move prior to 2 o'clock is a lot less. What size is a prime move prior? Well, we can already recognize how big is big. We can already recognize, for example, a move of 2,000 is a big move. We can recognize a move above 1,500 as a big move. So a prime move prior to 2 o'clock is probably this move here. That's about 1,200, 1,300. So that's probably a prime move there, about 1,500. Yep, there's about 1,500 there. So that's a prime move. And this is a prime move. And this is a prime move. And this is a prime move. So these are all prime moves before the before the US Open. After the US Open, a prime move's a lot bigger because there's a lot more volume. There's a lot more volume, right? So prior to that US volume, these were the prime moves here. Based on these prime moves, we can start thinking about the possibility of an exhaustion sell in here. We can start even contemplating the possibility, this one's 1,100, it's not quite 1,500. We can start contemplating the possibility of a prime buy into the bottom edges there after we start seeing these value divergences, but that's after a prime move. So when we look at oil, for example, here, we can start asking questions about these prime moves. So we can see, for example, at this stage here, we can see that there's the prime move there, there's the higher high on oil, and there's your opportunity to sell into that diverging storyline into those higher prints, yes? Is that not dead easy to spot, guys? Is that not crystal clear that happens to run up into the 76.50 sell side business that made you $400? Crystal clear. No questions, no excuses. Very easy trade opportunity. As we move across, none of these are prime moves. None of these are prime moves, but we see a prime move perhaps here. Not really. It's only 900. It's not a prime move at all. 900 is never a prime move, so that's not going to be explosive end of trend volumes. But this is a prime move. Does everybody see the buyable opportunity here? Does everybody see the buy? Where does the prime move stop? Right here. That's where the prime move stopped, right there. Does everybody see the opportunity to buy some 76.20s? 76.20s, buying into the new session lows. You can see there's the new session low again there. Price goes up, buying into the new session low there. Guess what happens? Price goes up. Who doesn't see how obviously easy these trades are? Who doesn't get it? Who doesn't understand this process? If you understand this process, you obviously saw these and you obviously were on them. If you understand this idea, if you understand the idea of inflation break-evens, you obviously managed to get away from that long bond trade. Look at what happened, right? Look at what happened. The bond sold off 191s, it's trading 190.04s. Did anybody flip the sell? Look at this buy trade on oil, 76.10s. Prime divergence. Prime divergence, guys, 76.10s. Was it one trade? No, it was three trades. There was one here, there was one here, and there was one here. What does that look like? Looks like every candle, every trade, every chart we've ever drawn in this classroom, doesn't it? That's what it looks like. It looks like it's an accumulation trade running into that phase. That's what it looks like. And when you do that, you say, wait a second, so that's the bracket high, that's the bracket low. I've already started to think about target prices. I've started to think about top edges. I've started to think about this trade area here. And we start looking for profit takes into that trade area. You can see the price into that trade area had a new prime move. A new prime move. And then a new prime move because it was obviously way, the prime move, guys, remember, is the highest high, and it has to go above 1500 in the London session, for example. So that's the new prime move there. And you say, right, well, that's the trade. That's the deal. There's the sell trade. And that would be your sell opportunity just there. That would be your sell. You've just went from 76.10s to 76.90s. You've just made another $900 profit, $800 profit on the buy trade of oil off the bottom edge prime move. And that takes away some brilliant trade outcomes there. Brilliant trade outcomes. Look at this, guys. It's crazy good, isn't it? Absolutely crazy good how easy it is to spot the best trades on the planet by just mapping out the prime moves. Something that's visible for everybody to use. Something that everybody can recognize and see. Something that everybody can draw straight lines against and say, damn it, that really is giving me the signal, isn't it? That really is giving me an incredible probability of being in at the right time. It's giving us this idea of where the maximum is, because I now know what big really looks like. To be able to put it into context is very important. How do you know when you've got a big lean? When you've got a 20 lot trading? Oh, I've got a big lean here. Really? 20? Did you not notice that the average big lean is 200? A big trade of 20 is not a big trade, it's a small trade. So is that a great lean? No. So you misinterpreted what that size meant. So when you start looking at this trade here, you start recognizing how the big trades evolve. This is maximum, peak, prime volume. This is exhaustion. This is maximum, peak, prime volume. This is exhaustion. And then be able to step into those trades at the right times without getting caught up in the noise in the middle allows you to make the best decisions possible. It's a class we did yesterday, so hopefully a few people have managed to use it today to make an awful lot of money.